All right. Imagine growing an account by over 100% in a month and losing over 50% of it within just 3 weeks. How would you feel? Or better yet still, what would you do? Well, that is what this video today is all about. I grew my account by over 100% in a month, and within just 3 weeks, I have lost over 50%. So, what am I feeling and how am I doing it? Let's take a look at it. So, this is my account all the way from January 1st till today, and you can see the equity curve grow and then slump again. First and foremost, we had the lowest time around 19th of March 2026, and that account grew all the way to this point at 9th of April 2026. So if you look at it, it's a $50 account that came down to $37 and went up to $116. Alongside, you can see the percentage gain, 128.39%. This is a lot of gain in an account just between the lowest point and the highest point. It's less than a month. 19th, all the way from March 19th to April 9th is less than a month. But what's happening currently is my account is now sitting at just 60% gain. Basically, I have lost a lot of it. So, how do you do this? Or rather, what do you do to tackle this? Because feeling bad is not going to help you. It's not going to make this any better. Neither is it going to make your trading suddenly change. You have to do something. And what do you do? Now, I went to do research. I went to ask Gemini, I asked AI. I also went around YouTube looking for videos that said what to do when you fail an account, or rather when you're failing in your account or when you're losing money. And what I noticed is they all mostly beat it around a very simple circle. Two things really need to be done. Number one, you need to review your trades. Number two, you need to review your strategy. Why are you doing this? You're going to review your trades to know if you are the one making mistakes. Are you beginning to overlook some certain things in your strategy that most likely you thought was not important, but right now you can see the repercussions of not doing them? Or, and not really an or, but more of an and, you also need to review your strategy against the market. This is to check if the strategy is still working, and if it's working, you get that natural reinforcement that, okay, this strategy works if I keep with all the rules that is in this strategy. Meaning, if you've been keeping the rules also, and you've been failing recently, you know that, okay, you're just in the actual drawdown period of your strategy. And this is exactly what I did. I took out the strategies I've been trading, right? I took out the strategies I've been trading and I ran back test across all of them, across the 15 minutes, the 1 hour, the 4 hours, and daily. And I just took out the places where it had the best profit factor, the places where it has the worst profit factor. And I compared and looked at it. I realized we were supposed to still be winning. Or rather, I am supposed to still be winning. So the error is not coming from the fact that the strategy is not working. The strategy is working. What happened was simple. I personally was beginning to cut some slacks in my strategy training. I think, they say because you're winning, it gets to your head. It doesn't get to your head only in the form of you being pompous. You could not be pompous and it's already getting to your head. How do I mean? So I haven't shown off or made noise about the amount of money I was making. However, I was getting pompous because I was beginning to overlook the necessary, or rather all key targets that needs to be met for that strategy to function in most of my trades. Let's take a good look at this. So what I have here are all my losses, all the losses I have on my trade. And one thing I noticed, the first thing I noticed when I started reviewing all my trades was this. I was strategy hopping to an extent. You can see I'm trading refined, I'm trading Quasimodo, supply and demand. You can see now, this is what I mean. For these 3 trades, without even looking into anything, what are the errors I made in these 3 trades? I did not have a supply or demand zone attached to them. You can clearly see it right here. I did not indicate supplies or demand. And those are the 3 biggest losses I'm getting. As you can see, a $10, a $9, and a $2. Let's take a look at them. This right here is the 15 minutes. And as you can see, I don't have a prior zone coming into this place. There is no zone. I just looked at, oh, there's an opportunity, take it. And that was what happened. I got wicked out. And when I look back at this chart, right? When I look back at this chart to see, okay, probably maybe I just got wicked out and the trade ended up moving in my direction. I think this would definitely shut anybody up. Let me head right there. So you see it. It did not move in my direction. I was trading in the 15 minutes, mind you. So even if I change out, so you can see, this is the entry, this is the exit, or rather the breakout, the close part, and you can see it did not move any move in my direction. Matter of fact, it has even gone even worse over the period of time. So what does this mean for me? That was a total loss on my part because I ignored some key things. You can see another one right here. Let's see it. There are no zones behind this trade. There was no supply or demand zones behind this trade. Hence, I was literally playing with fire. For this buying one, there is a zone right here. You can clearly see the zone right here. Allow me put up this. So you can see there's a zone right here. And if this was what price came for, then I would most likely have won this trade. But this one, total failure on my part. I made the mistake. Now that is one of the errors I made the most. I started ignoring some key things my strategy requires. And if you're wondering what the Quasimodo continuation, Quasimodo reversal really is all about, I'll have a link up here for you to join and watch the video about Quasimodo. It's like a choach, basically change of character, but it's a bit different and it's a little bit of a totally different ball game. Now, this is the mistake I have personally been making. If you look at yours, you're going to discover what is happening. After that, I had to reinforce that this strategy works. So what did I do? I went back to backtest it again over the period of time. Now this right here is my data. I'm going to filter for just specifically the Quasimodo reversal / continuation patterns, or rather levels. And you can see I have the best leverage in the 1 hour, 4 hours, and daily. It doesn't mean it doesn't work on the 15 minutes. It means on the 15 minutes, I do not see a good profit factor. Why? Because I filtered the entire thing for places where I have profit factor above 1.5. So I could win on the 15 minutes, but on average, I do not get a profit factor that is reasonable. Now let's expand this whole thing and look at what's going on here. On the 4 hours, right? On the 1 hour, it took 470 days of trading, basically 12 months. That's a year. And mind you, the sum total of the P&L is more like an average of the P&L and added average. So averagely, I would be getting 0.1% of the account, basically 0.2% of the account balance. And then the drawdown of 0.06%. Multiply both of them by 10. You have 1.6 and 0.6% loss. A total of 72 trades across all the markets. A total of 72 trades. So whatever the averages you're seeing here are across 72 trades. 35 of them are profitable out of all 72, meaning I have a 49% win rate. Okay, it's a 50-50 chance of winning every trade I take if I follow all the rules. All the rules. And the profit factor of 1.8 on average. So I'm basically winning. If I follow the rule, I may lose one, win the next one, and win the money I lost and over in the new one, right? That's basically what it is. Every single trade, and every single trade. Not really every single trade, sorry, on average, right? And the 4 hours, I have a longer time frame spent. So average day spent is 1,202 days. On 1 day, that's about 36 months, basically 3 years of review. And then we have profit factor which is higher, P&L which is way higher, about 1%. If you increase that, multiply by 10 as usual, you're getting roughly 9% or 10% of profits of your profits over 3 years on the 4 hours with a drawdown of 2%. And then you have a sum total, right? A sum total of 19.7. Oh, sorry, 197 trades. Taking a total of 197 trades, you have an average sum P&L of 9%. And then 94 of those were profitable. Basically, you have a 48% win rate. Okay, you are slightly close to the 50-50 again. And this was across 5 markets where it had that amount of profit, giving me a profit factor of 2.1. This clearly tells me that the best time frame to trade my strategy, the Quasimodo reversal, is the 4 hours time frame. It has a higher profit factor, he has more trades to take, he has a better win rate, he has more markets where it can apply easily, even though it has had lots of trade. And then on the daily, I have over 10,000 days spent, basically almost 11,000 days. We have over 362 months spent, and you notice how drastically high the P&L becomes over that period of time. It is on average, when you sum up the averages, you're running into the 3.2, that is about 32% in profit. And your drawdown is what? 13%. 13%. Maximum of 200, not really maximum, sorry, total of 277 trades, with 120 of them being winners. Basically, though the average win rate has dropped to 43%, still around the 1 loss 1 win, and also 5 markets in the same place with a profit factor of 1.8. So what does this all mean to me? The Quasimodo reversal, it's the strategy itself. It works. It crazily works. It works good. I just need to make sure I stick to the rules. So the fault was not the strategy. The fault here was my application of it. I started missing, or rather diluting it. So therefore, I'm paying the price. So what I'm going to start doing going forward is I'm going to go back, review any other pending order I may have currently, and ask, does this fit every single criteria for this strategy? If it doesn't, I kill it immediately. If it does, we can leave it, let it fly. That's the way it's going to go. So I hope you learned something from this video, and it's a very, very simple thing. I'm just going to conclude by saying becoming the best trader out there does not exist. There's nothing like the best trader out in the world. There are just traders who win and traders who lose, and there are lots more losers than winners. For you to be a winner, all you need, or rather not all, but one of the things, or some of the key things you need is, number one, you need to have a strategy that wins. And how do you know a strategy that wins? You run a backtest on it. You run a review of history. Now, history doesn't mean it's going to happen, but there's this saying that history always repeats itself, right? So you need to look back in the history and see this strategy. If you apply it in history, does it work? And how good does it work? If it's good enough for you, that's the first part. The next part is going forward. You're going to use that strategy and you will not dilute it. You need to trade that strategy and tick every single box before you go into a trade. Every single box. The moment a box gets unchecked, that trade is basically invalid. Even if it works out, it's working out after that point is purely luck, not strategy based. Purely luck. And then after that, the only thing you need to tell yourself is discipline. I'm only going to do this when it comes to my strategy and nothing more. Now, the good thing about the Quasimodo reversal is it doesn't require fundamental. It simply requires market strength, supply zones, demand zones, and that is it. You see that level appear within a supply area or demand area, you have yourself, you have the greatest thing you ever trade. If you want to know what the Quasimodo trading really looks like, I'll have a video right here, and in the next video I'll be explaining supply and demand in a way that you've never really thought of it before right here. So do well to click it and watch those videos. See you in those ones. Peace. Bye.